All right, glad to have you back. We'll continue this conversation around the resolutions after the two-day Monetary Policy Committee meeting. And Mr. Paul Alaje is a partner, senior economist with SPM Professionals. He joins me live from our Abuja studios. Mr. Alaje, good afternoon, and thank you so much for joining the program.
Good afternoon, and thank you so much for having me.
Great. Now, I'm looking at what the MPC came out with after the two-day meeting, and NPR stays at 27.50%. My first question to you would be, was that what you were expecting, considering the 24.48% that's the rebased CPI that we just got from the MBS? Were you thinking that there was going to be any shift? Economics seems to be getting more interesting and looking at what happened in few days ago, and considering what happened yesterday at the Central Bank meeting.
Well, I must put my hands together for MPC. I was not expecting any other decision than to hold rate. If MPC had increased rates, I would have been certain that the decision might have been ill-advised, or those who had made such decision at the central bank, perhaps we need to consult the advisor on monetary policy, or maybe they are not as grounded as we thought they should be. And if they had reduced rates, honestly, the feeling would have been the same, even though in recent time, I have advocated for a reduced rate. What happened from the Bureau of Statistics is not a reduced inflationary rate, no. MPS did not say Nigeria inflation reduced. That would not be correct. What MPS did was that the reference year changed. And because the reference year have changed, almost all the time, about 99% of the time, the rate will not be the same. So the reference year changed from 2009 to 2024. Because of that, what inflation we present will be different, from 34% to now 24%. Now, in econometrics, you cannot just post 34% for the previous month and now post 24%. When you look at the trend, it has been growing steadily at an increasing rate from 25 point something to 26, 26 point something to 27, upward to 31 point something, another one 32, 33, now to 34. What happened that the number jumped from 34 to 24? That's what we call policy shock, or we call outlier in data entry. So what the Monetary Policy Committee might have done is to isolate that by saying, oh, so for those of us who are researchers, we now look at this number. Because if you had entered it as 24, the challenge will be that you are projecting that there is a major improvement. Remember that when we say inflation, it's not just this number. We are attempting to measure what is happening to CPI. So two things happened. MBS had changed the weighted average through their quick-up analysis. What food component used to carry from 51.8 or so, they've reduced it to 40%, claiming that more people now eat at restaurants, which is an argument that made sense. So when you look at the number, you see that even though it presents as though the number has changed to a downward review, in the real sense, what mattered was that we have changed the year of reference. The best decision for any monetary policy committee to do is to hold it. When you look at the rates, you know, monetary policy rates in Iraq during the war, even though the numbers were changing, when you have major activities such as you had COVID-19, the country that eats directly, it is expected that they see if it's going to impact inflation or unemployment or any number. Now that people did not go home, people did not go to work during COVID, do we now say that we are going to use that period to make policy that everybody was under lock and key? You see that making policy because everybody was under lock and key for a period of 5 to 6 months in a year, and we have not returned to under lock and key afterwards, will be a big mistake. So it's an outlier. What we do in research is to study it before making policy. But going forward, we have about a quarter or two before we can start making policy by studying the new environment. And what are we going to use immediately? It's not to say the number has therefore reduced or the number has increased, therefore increased. That's not it. We now start checking out what is the rate of growth. And this is real economics. Economics is not just about the absolute number. You can mention 30%, 40%, 1%, 0%. That's not what matters. If country A's inflation grew from 40% to 42%, and country B's inflation grew from 20% to 30%. To many people and non-economists, they say the country A inflation has more potency because it's 40 to 42. But the country that should be weary is the one from 20 to 30. Because the rate of change is 33%. Meanwhile, the one that grew from 40 to 42 is only 5%. Consequently, I think the Monetary Policy Committee took a right decision by sitting on the fence, allowing not just MPR to be the same. MPR, the same. CRR, the same.
Exactly.
Liquidity ratio, the same. Asymmetric corridor, the same. Because what happened needs to be assimilated. In the coming months, we now check the rate of growth, where you now know whether MPC knows what they are doing or not, which I believe from demonstration yesterday, I gave them a thumbs up, is to see what will be the rate of growth from 24%. If the rate of growth from 24%, that is what we should be watching more now than the absolute value. Because we have changed reference here. What we can now compare is rate of growth from where we were coming from, perhaps, in the last 18 months or last 6 months compared to what will happen in the next 18 months. But because of short time, the MPC need to sit again, one would advise that we look at what happened in 2 months to 3 months' time as a quarter before we can come up with a policy.
Indeed, brilliant stuff. We expect that we see these figures and what they mean, looking at the realities on ground. But let's look at the cash reserve ratio, which is also left at 50% for commercial banks, 16% for merchant banks. My question to you really would be, what does it mean for the banks at this time where they're expected to recapitalize, you know, what is happening, the $1 trillion economy that the federal government is after? What do you think this means for our commercial banks? And of course, again, to the lending rate thing, do you think that this would give some sort of relief for those that have been complaining of high interest rates? That's a two-in-one question, I guess.
Yes. You see, when we say that government agencies, especially fiscal and monetary, there is no handshake. The central bank governor said it has improved.
Yes.
But let me give you an instance that just happened. MBS, a government agency, looks at the number and says we need to make it more relevant. But we have Monetary Policy Committee. Remember that they should have met, but they were waiting for the number from MBS. Yeah. Now, when they met, based on the rebasing, they had to hold rates. Not because the rate improved or anything, but this is an outlier, which is what is practicable globally. But here is it. We know that the terrain is tough. We are battling with high inflation. We have increased rate time and again. The inflation has remained stubborn and steady. It has built skyscraper up to 34%. We have also held, what's it called now? Liquidity ratio to about 50%, which is what banks must be made available because of the necessary demand that may be coming from customers and so on and so forth. What is the challenge to banks? One, the first challenge is banks have limited amount to invest and to do business. That is what must be in their votes. That's the challenge number one. Number two, it has implication on growth. Remember that when you are fighting inflation too hard, not just with policy, but when you are fighting it tooth and nail, it might discourage economic growth. It might, and that's the thing that is about to reflect in the case of Nigeria. And I'm talking of real growth, real growth. It might discourage it. You might see some 4% GDP growth rate, and you think we are growing. Well, I've made an analysis that went viral on what Nigeria was about 1 year ago or so, or more, and what Nigeria is in terms of our worth when you compare with other nations. But that's not the conversation here. Two, you may also now say that even subnational state governments that have borrowed, another administration had borrowed money by raising bonds at 17, 16%. Now, there are new administration who wants to perhaps refinance some of this. It's not easy. So people will say that, but subnational are any more money. Why is it that they are unable to perform? The money that goes into service is crazy. And the negotiation for some of them might not be as apt. But to go back to the market, to even convert their commercial loans to bonds, as the case may be, becomes very difficult. Why? When you even look at how much the rates are, we have seen what MPR is very high. So yes, on one hand, we want rate to reduce, very importantly. But the Monetary Authority needs to bring thermometer to measure the temperature in the economy. What are they measuring? Inflation. Is it reducing? That is why if you are saying that inflation reduced, we'll be making a big. It could even be that if we had used the previous reference year, inflation might have increased to 35% or 36%. So, but I don't want us to sink ourselves in that conversation. Now that we have changed reference year to 2024, which I think is the safest ever. Why? That was the time we saw the craziest economic quagmire in recent times. So it's better we make it a base year, then we now improve from there. So the challenge to the banks is more money to lend, which is not going to be there. High, what do we call it now? Cash reserve requirements, which goes to the Apex Bank. And of course, monetary policy rate, the little they have, how much it serves as part of benchmark, how much must they give it out? So it's going to be tough terrain, and that is why for most people that borrowed from banks, especially corporate, they might have received letters saying the rates has changed. It is because of the policy environment.
Moving forward, we still expect figures from the NBS, particularly for the GDP, and that is significant, very, 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 very important. With this that has happened, what are your expectations with regards to that? Many have talked about the target for the $1 trillion economy, like I said earlier, and are saying that some of these figures we need to really watch. And the NBS Statistician General has said they are putting all of this into consideration for them to come up with figures that would, of course, tally with reality on ground. Now, what are your expectations as an economist that understands Nigeria's economy? What is it looking forward?
Well, with the rebasing and the recomposition of the inflation rate, what I'm expecting is I'm going to leave a very wide gap. Right now, we are doing a bit above $200 billion. But with the recent activity, we might be getting an amount between $300 billion to an amount a bit above $500 billion.
Sorry, I think we are number 4 at the moment. I think we are number 4 at the moment.
Yes, we are number 4 now.
Go ahead.
We dipped into number 5, but we quickly came out of it again.
Okay.
We are currently number 4 in Africa.
Yeah.
But if we go back to 500, definitely we will maintain our first position as a country. What we need to do, therefore, after that, is to make policy environment friendly. See, for the rest of the world, not so much is changing. In 2022, in 2021, 2022, we were a bit 2021, 2022, yes, we were above the United Arab Emirates that had about $400 billion. We have above that $500 billion. They have not rebased their economy as it were, and their economy went a bit backward. Now we have seen that review to first position, to number 4 position. My goal and my dream is that we'll be number 1. And many people say, does it really matter? It does. It does. It does. It does because it also has implication on investment. If you are the largest within your region, confidence level is there. See, confidence is everything. People trust you when they have confidence that you will do what you are saying. When they have confidence that when they put their investment in your economy, that your economy is able to absorb it. $500 billion or more, even from $400 billion. If you have that as the rebase here, and we can transparently prove that that is our true worth, then it might just encourage us by getting more investment. Look at what has happened to our economy. As the economy was emaciating because of some policies, what has happened? Investment also became dwindling. So that is not to encourage that we should bring fictitious figures as part of our rebasing. No, is that the items MBS have identified that has not been captured, the economic activities that they want to capture and formalize, we need to look at them critically, bring them to the fore, and say, yes, this is the what Nigeria. We have to be careful in working to the answer. I can give you an example of a country, Sri Lanka. And I say this so that people can go and read about Sri Lanka. Sri Lanka came up with figure and said this is now the new figure of their country. Inflation number were doctored. And I'm saying this because it's already in literature. It's already in literature. I can cite literature for you that this information I'm giving you are. So Sri Lanka presented all those. But at the end of the day, Sri Lanka economy sank. And we saw what happened in Sri Lanka at the time, I think about 2 years ago, because of the number. So this is my own country. And I can tell you that the best thing most of us should do is to support MBS when they are doing the right thing. And when they think that we are not very comfortable, quickly speak out. I've done that a number of times. That is why when I saw the inflation figures, a number of people expect me to hit the head of MBS and say that what they are doing is not correct. You know the truth? Nigeria is not the first country to do that. Now, I'm happy with the way Monetary Policy Committee has responded to it by holding rates. I'm happy they did not miss that point. It's so significant because it may affect our entire policy outlook, even the way international organizations will perceive us as people who understand econometrics and as people who understand our policy outcomes, and when you see an outlier, the kind of decision to be taken. Fantastic one, Mr. Cardoso and his team did there. Now, so rebasing is important because there are some activities that are not captured, but not overstating the size of the economy is indeed more important. And I hope that that is what we'll see when the number comes out. But in any case, when it comes out, the hope of someone like me is that we take back the first spot so that there are some of us who independently go around the world to convince people to come and invest in our economy. At the end of the day, it is when they invest in the economy that stays with you. That's the way we can reduce unemployment. That's the way we can reduce poverty. That's the way we can reduce hunger. So the numbers must be right. It must not just seem right. It must not be too much, and it must not be too small. It must be far from both. And I'm hoping that those that are in that have that responsibility, the National Bureau of Statistics here in Nigeria, will do the right thing on time.
Interesting conversation as always, Mr. Paul Alaje. I must thank you so much for making sense of this. I will see when the figures come up, and the next MPC meeting is for May. I think we have like 2 months to, see how all of these figures and realities on ground play out for us to see what is expected.
Yeah.
Thank you so
MPC
much.
should better be looking at rates.
Yes.
They better be looking at rates, not the absolute number. It will be very confusing.
Yes.
So real economists in the coming period, what is the growth rate? Compare it to the last 3 months. Then that should inform our policy, because you cannot see the number grow to 30-something%. So if you are reducing, base it on rate. If you are increasing, base it on rate. Is a game changer right now.
Thank you so much. And enjoy your Friday. I see you're really set for it with your cap. Enjoy it so much. You look very good. Thank you so much, Mr. Paul Alaje.
Thank you so much for having
partner,
me.
senior economist.
Thank you so much for having me.
SPM Professionals. Well, that's it for MPC and, of course, understanding these figures. We'll take another break. When we come back, we'll be discussing markets and see how the markets have performed for the entire week. Stay with us on Business Nigeria.